All right, today we're gonna talk about buy and hold investing. I'm a huge fan of buying companies and holding them for the long term, but there's another kind of philosophy out there, or another practice called day trading, where you jump in and out of the market. You're trying to always buy the stocks when they're on sale and sell them when they're at a high. And there's a couple problems with that. So buy and hold, very simple, right? Buy it, hold it as long as possible. Day trading, bob and weave. Bob and weave, baby, bob and weave. The problem is it's so hard. It's so hard to know when the bottom of a stock is, when the high of when a stock is, and there's a cost to all of this. There's a cost to getting in and out of the market. There's a tax implication to getting in and out of the market. The vast majority of investors fail to keep up with the market over time. What I mean by that is if you look at the history of the stock market, you could look at it since 2009 to now, it's been over 15% a year. It's been bonkers, crazy. But you could even look at it since since the beginning of when they started tracking this. And now you're talking about, back in the 1920s. And this is world wars, this is viruses, this is just every, financial collapse, this is everything that you can imagine. And with all of that baked in, the market has averaged over 8% a year. It's absolutely astonishing. Active traders, they can't keep up with the market. They just simply don't. And so since I don't put enough time or research in to believe that I can beat the best people on Wall Street who also can't keep up with the market, I don't try. I buy and hold. I buy companies and I hold them for a long period of time. In fact, the best investor in the world, Warren Buffett, one of the few individuals that has beaten the market over 40, 50, 60 years, is a buy and hold company. Buy companies when they're at great value, hold them for extremely long periods of time. And Warren Buffett, as his legacy, for his family, said, when I pass away, what I want you to do is I want you to buy an index fund. Just put vast majority of our wealth in an index fund and buy and hold for the long term. That's astonishing. I mean, really, when you think about that, Warren Buffett, with all the information, all the resources in the world, what he's telling his heirs is, I want you to buy and hold the entire market. If it's good enough for Warren Buffett, it's more than good enough for me. And there's two ways of looking at that, right? There's the index component, which I'm a huge fan of. We've talked about this in the past. Let's own all the companies. Let's not worry about it. And then there's the actual buy and hold piece, which is what we're really talking about today. Let's take a look at the Great Recession. So this was in 2008. If you put all of your money in at the very top, and over the following year it got cut in half, you would probably question how smart this advice actually is. Well, I followed your advice and my money has been cut in half over the last year. But if you held that advice, if you didn't freak out, if you didn't sell at the bottom, if you didn't try to hop in, then your money would have more than doubled over the last 10 years. And if you actually invested through the downturn and as it came back up, following the advice that when it's high, I'm gonna love it. When it's going down, I'm gonna view it as going on sale, then you would have well more than doubled your money. That's the power of buy and hold investing. It's so hard to know what the top is, and it's even harder to know what the bottom is. They say that the first person to know what the bottom is, the bottom of the market, was the last person to sell low. We don't want to sell low, right? And here's what happens. If the market had this incredible growth over the last 10 years, but if you were out of the market because you were day trading, because of fear, you just wanted to avoid a few different things, if you missed even the 5 best days, your return was cut from well over 15%, which it's been, basically every year since the bottom of that market, to like down around 3 or 4%. If you were out of the market on the 10 best days, your return actually goes into the negative. It's crazy. Now you could say, well, what if I missed the worst days as well? And that's a great point, but it's so hard to know. It's so hard to know. So instead, don't try. We know that the vast majority of investors fail to keep up with the market. Let's just try to keep up with the market. Let's buy and hold and make sure that we can say, I sure as hell kept up with the market. I can do that. I know how to do that. I know how to do that every time.